Today we're diving into one of the biggest stories in tech and finance. The company that helped launch the generative AI frenzy is now setting its sights on the public markets with a jaw-dropping potential valuation. Buckle up. Imagine this: a company planning to go public and doing so at a price tag of $1 trillion. That's not a typo. Let's break down who this company is, why the valuation is so ambitious, and what risks and opportunities lie ahead. The company we're talking about is OpenAI. It started as a nonprofit research lab, pivoted into a for-profit structure, and quickly became a poster child of the AI boom. Recently, OpenAI is reportedly preparing for an initial public offering that could value it at up to $1 trillion. The company is said to be looking to raise at least $60 billion in the offering. What's driving that kind of ambition? First, huge capital needs. OpenAI has publicly talked about building out massive compute infrastructure. We're talking gigawatts of power, billions of dollars in hardware. Second, AI is hot. The public markets have re-rated tech companies based on AI potential. Think NVIDIA reaching a $5 trillion market cap. So, the valuation isn't just about what exists today, it's about what investors believe could be. But, and here's the kicker, belief alone doesn't guarantee success. Let's zoom in a little deeper. A $1 trillion valuation places OpenAI in the company of tech giants. But there are some important caveats. Revenue. The company is expected to reach a run rate around $20 billion by year-end, according to some sources. Profitability. Not yet there, meaning heavy spending, large infrastructure costs, and plenty of risk. Product/hardware presence. While the company is known for its AI models, it has limited consumer hardware exposure. So the question is, does the valuation align with what the company is today or what it could become? Industry voices are mixed. Some analysts say, hold off until you see profit margins improve, hardware play emerge, or a major partnership edge. Others argue, this is the future, get in early. At this juncture, the valuation reflects more promise than proof. For OpenAI to justify a $1 trillion valuation, a few things need to happen. Scalable monetization, not just licensing models, but high-margin deployments, enterprise contracts, recurring revenue, hardware or specialized infrastructure. Having controlling tech or hardware gives an edge and durability. Strategic partnerships and global deployment. Working with large cloud providers, governments, large corporations reduces risk. Cost control and path to profitability. Infrastructure costs are massive. Efficiency will matter. If any of these slip, the valuation could look stretched. So if you're an investor wondering how to play this story, one route is to wait for the IPO. Once shares are out there, you'll have clarity on pricing, valuation, future direction. Another route, invest in companies already public that have exposure to this ecosystem. For instance, companies with large AI hardware bets, cloud infrastructure, or AI software leadership. In other words, you can get indirect exposure now and decide later whether you want to take the more direct bet. To wrap up, we're likely watching one of the most anticipated IPOs in modern tech history. If OpenAI executes, the upside could be huge. If it falters, the risks are real. Valuations this high are built on expectations. Expectations about infrastructure, innovation, adoption. Expectations about the next wave of computing. So, keep an eye on the milestones, revenue growth, profitability signals, major hardware or product launches, investor appetite. Those will tell you whether the vision becomes reality. Call to action. What do you think? Does the $1 trillion price tag make sense for OpenAI? Or is a more modest valuation more realistic given the risks? Drop your thoughts in the comments. I'll follow up with your responses next week. Thanks for watching. Hit subscribe if you want more deep dives like this, and see you next time.